and welcome to our webinar. Today we're going to talk about important retirement deadlines for 2025, and also those deadlines are going to go into 2026 for the 25 tax year, so we'll talk about that as well. My name is Larissa Greene. I've been with Advanta for a little over 13 years. I included my contact information here in case you have a question you'd like to ask but maybe not ask during the webinar. Everybody will remain muted throughout the webinar, but I will take questions. So there's a question box on the right-hand navigation of your screen. You'll see it there. Please feel free to drop questions into that box, and I'll answer them as I can as we go throughout the webinar. I did upload the slides for you, so there's a handout attached for you under handouts as a PDF. So you'll see the slides there, and that will include all the slides from the presentation, so you'll have those deadlines. I want to tell you a little bit about Advanta before we get started, and then we'll jump into all the deadlines we have coming up when it comes to IRAs, HSAs, and education savings accounts. We have been in business a little over 20 years, and we have $3.6 billion in assets under administration. We have 2 offices. We're in Clearwater, Florida, and Atlanta, Georgia, but we can help anyone, anywhere. And all of our clients receive a dedicated account manager. And I mention that because we will talk a little bit about self-directed IRAs. That's really not the focus of today's presentation, but just so that you're aware, self-directed IRAs a lot of times are new to individuals moving money over, and so it helps to have a dedicated account manager who can help them through that process. So it's a little bit different than when you're making investments in the market. There's a little more paperwork involved, and so everybody is going to receive a dedicated account manager to help them through their first investment and so on. We have events going on all the time, usually 2 webinars a week, and we also have our own our own networking event the last Friday of every month. And so actually that's coming up. And so if you guys are interested, it is this Friday. You can check out the events on our website and register for the networking event. We also have a podcast and a blog where we keep everyone up to date on industry specific news. And so those are top notch. I would highly recommend checking those out. If you're joining us for this webinar, then you're already on our email list, and those should also be emailed to you when they become available. We're going to talk a lot about the deadlines today, but we would encourage you, of course, to talk to your tax advisor, your attorney, and any other advisors that you have, because although we are going to talk about deadlines, there are going to be some deadlines that are specific to yourself and your business and how you file. And so this information is for educational purposes only, and we encourage you to consult your attorney, accountant, and financial advisor before going forward. So let's jump right into it. Planned contribution limits for this year, and then we'll talk about the deadlines. And I know there's a lot of question as to, what the deadlines, or excuse me, what the contribution limits are going to be for 2026. And the IRS hasn't posted those yet, but I anticipate that they would be out soon. And I'll let you know when I get to accounts that we typically do see changes for. You never know, we could see changes for all of the accounts, but typically those are going to be the employer-based plans and HSAs that we're going to see some changes for when we get to 2026 contribution limits. So let's go into 2025 here. We have traditional and Roth IRAs. The contribution limit for those is $7,000 or $8,000 for those over the age of 50. And it's going to be based on your compensation. So for most of these accounts, the majority of the accounts we're going to talk about, you do have to have earned income to make contributions, and then your limits are going to be based either on the earned income you have for the year or the contribution limit, the lesser of the two. So please keep that in mind. So if you have a traditional or Roth IRA, you can max out those contributions at $7,000 or $8,000 for those over the age of 50. But please keep in mind that that contribution limit is going to be per individual, not per account. So if you have a traditional IRA at a brokerage and you have a traditional self-directed IRA, it's not $7,000 each account, it's $7,000, whether it's to one or the other or spread amongst the two, but it's going to be per individual, not per account. SEP IRAs are employer-based plans, and so that is an employer contribution, and it is the lesser of up to $70,000, 20% to 25% of your compensation. And again, that is an employer contribution, and we'll talk a little bit at the end about how you can combine certain accounts and how you can have and contribute to a few of these different accounts and how they can work together. But for 2025, you're going to have a contribution limit of up to $70,000. And we stress 70,000 because again, it's 20 to 25% of your compensation. It will depend on how your business is set up and how you file. So keep that in mind. Simple IRAs did see some changes lately, and so I included some additional notes here for you. But with a simple IRA, your contribution limit for 2025 is $16,500. That's the employee contribution. There is a catch-up contribution. So for those ages 50 to 59 and 64 plus can contribute an additional $3,500. For those ages 60 to 63, the additional contribution is $5,250, and that is based on a formula. So you're probably going to see a little bit of a change in that for 2026. And then you also have the employer contribution, which is a 1 to 3% match, and that depends on how the simple IRA is set up. And then just a note here for the simple IRA, the contributions can increase depending on the number of employees and allowances made in the plan. So keep that in mind. And again, consult your tax advisor if you have questions on those contributions or how they might change depending on the number of employees you have. For the 401k, it's $23,500 as the employee contribution, and just as the simple IRA, you're going to see an employer and employee contribution with a solo 401k. So it's $23,500 as the employee. The catch-up is $7,500 for those ages 50 to 59 and 64 plus. And then what you're seeing called a super contribution for ages 60 to 63 is $11,250 this year, and it's salary deferral, or basically employee contribution. And then there is also an employer contribution, again, up to 25%, so 20 to 25% employer. And the combined total, so employee and employer contribution, is $70,000 for those under the age of 50, $77,500 for those 50 to 59, for those 50 to 59 and 64 plus. And then for those age 60 to 63, the combined total is $81,250. So just to remind everybody, this is a formula of your income with the employee and employer contribution totals. The next account here is Coverdell Education Savings Accounts. You also hear them called CISAs or ESAs, but essentially a way to save for education outside of a 529 plan. And unfortunately, I haven't seen this change in all the time I've been with Advanta, but it's $2,000 per child per year. So $2,000 per child per year for an education savings account. And then the health savings account contributions for 2025 are $4,300 for an individual, $8,550 for families, plus the $1,000 catch-up contributions for those ages 55 plus. Now, I just want to make a couple of notes here because I get this question all the time on the HSA. It's an individual plan if your healthcare plan is for an individual. It's a family plan if your healthcare plan is for a family. And also please note that the catch-up contribution for an HSA starts at age 55 plus. Okay, different than the employer-based plans where it's 50, and a traditional and Roth IRA also 50, but for an HSA it's 55 plus. So let's talk about deadlines for each of these accounts. So traditional and Roth IRAs, again, that contribution is listed for you here. So when do you have to have your account set up and contributed to for the deadline? It's April 15th, so tax filing is April 15th, 2026. And you can still make your 25 contribution. I know I'm throwing a lot of dates at you here and stuff, but please keep in mind your 2025 contribution can be made all the way up until April 15th, 2026. And you can even open and fund an account for the 25 tax year all the way up until that deadline. So how does that work? If your account is already established, just make sure to either get your wire or your ACH in by that deadline to make your contribution, or have your check postmarked and in the mail on April 15th, 2026. But please keep in mind, I urge people, please do not wait until the deadline or we're getting closer to the deadline, because there are no exceptions for bounce checks or checks lost in the mail. And it does happen. Wires not received for various reasons, whatever it might be. And so if you're looking to make those annual contributions, I would recommend that you don't wait. I know we're coming up to the end of the year here and there's a lot going on, but it's a great time to talk to your accountant and decide how much of a contribution you'd like to make, and just go ahead and get that in so that as we get up to tax filing, that contribution is already made and you don't have to worry about anything like a check lost in the mail or a wire not received. Even if you file an extension, please note for traditional and Roth IRAs, and there's a few other accounts that are going to be similar, you have to still make your contribution by April 15th, 2026. So even if you file an extension, you still have that hard deadline. So keep that in mind. The first of our employer-based plans, we're going to talk about the SEP IRA deadlines. And the SEP IRA is really cool. It's an employer-based plan, and the really cool thing about it is you can still make contributions up until tax filing plus extensions, so as late as October 15th of 2026. And you can even establish that plan that late. And so if you're, a new business, if you're looking at what your income is for 2025 and trying to determine whether or not you're going to make a contribution to a SEP IRA, you'll have plenty of time to do that. And again, based on your filing deadlines plus extensions, so if you file for an extension, you could have as late as October 15, 2026, and you can even set the plan up until then. So completing your application, making your contribution, again, by check wire or ACH, just making sure that if you're setting up a new account, you're going to complete the application, you're going to put your contribution check in the mail, and it's going to all be postmarked by that date, by your tax filing, or again, making sure your wire is in or your ACH is in by that time. So you still have a lot of time for the SEP IRA, but if you're looking at it again, I would urge you to talk to your accountant before the end of the year so that you can kind of make projections for that. The simple IRA, another employer-based plan, and this one is going to be one where you can make employer and employee contributions, and we talked about what those look like, and you're going to see that we mention here again those super contributions that you can now make to the simple. I did have a question on a SEP, so I do want to go back. Is there a SEP Roth IRA? There is. A Secure Act made it possible to make contributions to a SEP that are considered Roth. And so if you're looking at doing that, you'll just want to check in and make sure that your SEP is set up to accept those Roth contributions. Thank you for the question. So the simple IRA is, again, employee and employer contributions. And so what do those deadlines look like? Well, with a simple, you did have to have it established by October 1st, 2025. Now, if you have an existing simple, you can make your contributions, you're all set. But if you have not established a simple, the deadline to do that was October 1st, 2025 for making contributions in 2025. There are really few exceptions to that date, so keep that in mind. You get both employer and employee contributions. Your employee contributions need to be made no later than January 31st of 26. And again, that might depend on how your business is set up. So make sure, again, you're checking with your accountant. The employer contribution is up until the employer's tax filing deadline plus extension. So again, depending upon how the business is set up, but those can still be made. And again, your simple IRA at this point has to have been established for 2025 in order to make those contributions. The solo 401k is another employer-based plan, and it also has employee and employer contributions as we discussed. You can see up here, I listed those again for you. Employee contributions can be as late as tax filing plus extensions, as well as employer contributions. You do have a little bit of time on these, but I again would urge you to talk to your accountant before the end of the year so that you can get it set up and take advantage of all the different types of contributions. Our solo 401k plan allows 3 different types of contributions. Those can be employee, employer, and employee non-Roth after tax. You can make Roth contributions to the 401k. So you have a lot of flexibility with this account, but check in with your accountant, see when you have to have this set up by so that you're setting it up with plenty of time to still make and take advantage of all your contributions. And then once you are ready to make contributions, you have dependent again on how you pay yourself and how your business is set up, you have employee up until as late as tax filing plus extensions, and employer as well as late as October 15th, 2026. Employee contributions are considered salary deferral. I like to call them employee contributions because, sometimes we're working with sole proprietors, independent business owners, and then again, you have several different types of contributions. And we actually do an entire webinar on solo 401ks because there's so much great information on those accounts. And so if you're interested in that and you want to send me an email, I'm happy to send it to you, or you can browse our video library for that information as well. As of 2020, 401ks can be established up until the employer's tax filing deadline plus extensions in order to make those employer contributions as well, as I mentioned. Education savings accounts. Again, the contribution limit is only $2,000 a year, but it is a great account. Your contribution can be made all the way up until April 15, 2026. And again, you can establish a brand new ESA all the way up until and on April 15th, 2026. So if you call us on April 15th, 2026, and you fill out an application and you drop your check in the mail and it's postmarked, you can get that account set up. And the really cool thing about this time of year is once we hit January 1st, you can make last year's and this year's contribution at the same, or 2025 and 2026 contributions at the same time. And so that might be really helpful as far as investing and self-directing this account, to have $4,000 in that account, right out of the gate in order to make investments. It is a really cool account. It has a lot of great benefits, including being able to reassign the beneficiary when it makes sense for you to do so, and the allowances for taking distributions for education. So I would encourage you to check out this account if you have somebody in mind for an education savings account. And again, April 15th is the deadline. There are no exceptions for bounce checks, lost in the mail, ACHs and wires not received in any cases. So please keep that in mind when you're looking at establishing these accounts. Health savings accounts. We're seeing a lot of interest in health savings accounts right now as we're getting closer with open enrollment. We do a whole webinar on health savings accounts, and it's a great webinar if you're looking at an HSA, or maybe you have one and you just don't understand all the little nuances that go along with it. I would encourage you to check out that webinar. Again, I'm happy for you to send me an email and I can send it over to you, or you can browse our video library to check that out. The contribution limits are listed here again for you. The contribution deadline for 2025 is April 15th, 2026. You can establish and contribute for 2025 all the way up until and on April 15th. However, you must have qualifying healthcare coverage by December 1st of this year. So if you want to make a contribution for this tax year for 2025, your qualifying healthcare coverage does have to be established by December 1st. So please keep that in mind. If you're shopping for healthcare coverage and you want to have an HSA, you want to make sure that you're going to get a plan that allows those contributions. So high deductible healthcare plans that allow those contributions. So just check with, whoever might be helping you shop for that coverage. Make sure you can make those contributions, and then have it established by December 1st so that you can make the 2025 contribution, and then you have to maintain that plan for the following 12 months in order to make and keep the entire contribution. So if you drop healthcare coverage at some point during the 26 tax year, you may have to look at the prorated amount you may have to remove from the account from your 2025 contribution. If you don't have an existing account, the same rules apply. Open your account and get your contributions in on or before April 15th, ACH check wire, and along with your new account application being received in order to make that contribution. Again, with an HSA, even if you file an extension, you must have your contribution made on or before this date. And that's really important because I think a lot of times we forget about that. Well, we filed a tax extension, so that means that we must be able to extend when we make our contribution as well. And for Roth and traditional IRAs, as well as ESAs and HSAs, that's simply not the case. So please keep that in mind. One more quick deadline that I have for you is converting pre-tax accounts to a Roth IRA, and many people know this as a Roth conversion. And this is a great way to maximize non-deductible IRA contributions. Everybody is eligible to convert. There's no income limitations. Sometimes we'll see people convert after they consult their accountant and find out that, maybe this is the year where they have some deductions to offset the tax they'll pay in order to do that. Again, we do a whole webinar on Roth conversions, and it's a great way to learn about them. And really this is the time, because your deadline to do your Roth conversion is December 31st of 2025. So we talked a lot during this webinar presentation about how a lot of these deadlines extend into 2026, but the Roth conversion deadline does not extend into 2026. So please keep that in mind. You have up until December 31st. So it's always, in order to convert and have it credited for the current tax year, it has to be in the current tax year. So 2025 Roth conversions are coming up. And so talk to your accountant, find out if you're thinking about doing a Roth conversion. And if you're not familiar with a Roth conversion, that's just the ability to take a pre-tax account, move it over to a Roth IRA and have it now grow tax-free, but you are going to pay taxes. That's a 1099 ordinary income to you for the year you convert and the amount you convert. It's not just cash. You can also convert assets. So if you decide, hey, I have this investment, I want to convert it over to a Roth IRA so that going forward, the growth is tax-free. You certainly can do that, but all of it has to be done by December 31st. So keep that in mind as we're getting towards the end of the year. And the end of the year is coming up fast, as you guys know. And so keeping all of these deadlines in mind will be important. I don't see any questions, and that is going to really conclude the deadlines portion of the webinar. I'm just going to give you a quick summary. But as I kind of go through this and then we talk a little bit about self-directed IRAs, please make sure to type any questions you might have into the question box and I'll get those answered for you. So looking ahead for your 2026 taxes, some accounts can be opened and funded into 2026. So keep that in mind. But don't wait. So if you find out you want a solo 401k and that's going to be best for you, for example, they have specific deadlines, simple IRAs, SEP IRAs. I mean, really all the accounts have specific deadlines. So be aware of that and talk to your accountant now so that as we go into 2026 for the 25 tax year, you're well aware of everything that you need to do and what your timeline is to do those things. Contribution limits generally increase for many of the accounts each year. So keep that in mind. If you establish a solo 401k for 2025 and you make your contribution and then we get into January 1st, 2026 and you want to make a 26 contribution, well, there's probably going to be an increase. The employer-based plans increase, as far as I can remember, every year. And so look and take advantage of those increases if you want to maximize those accounts. You can also spread your contributions out over the course of the year if you find that helpful, and especially with, if you pay yourself a salary, for example, your employee salary deferral contributions, for example, or even your Roth IRA contributions. If you're like, okay, my goal is every year to contribute the max, but I don't want to do it in a lump sum, you can spread it out over the course of the year. So now we're kind of at the end of the year, and if you wish to do that, you still can, but you have only up until that April 15th deadline to maximize the 2025 contribution. And then also keep in mind, many accounts can be combined to maximize your benefits. So even if you have a solo 401k, for example, as long as you had enough in earned income, you can also have a Roth IRA. So as long as you're eligible for both accounts, then you can have both. You can max out both based on your income. And then those accounts can work together as well when you're making investments. I had a question pop up here. Can we have an ESA and an HSA? So ESAs and HSAs can be self-directed. So everything that we talk about today can be self-directed. And so those accounts can invest in alternatives like we're going to talk about momentarily. The rules for self-directing ESAs and HSAs are going to be exactly the same, and so they can do that. And the IRAs and solo 401ks can do that as well. So all of these accounts can be self-directed and we can help you with those. And they can also be partnered to make investments. So if you make an ESA contribution and it's just the $2,000 and you're thinking, okay, well, where can I put this money so that it will grow? You can partner your ESA, for example, with your solo 401k in order to make investments. And the partnership would be pro rata based on the funds that come from each account in order to make that investment going forward. I had a question pop up. How is the distribution realized if needed? I'm not sure of what you're asking there. If you could just clarify for me a little bit, but I'll talk a little bit about distribution since you're asking if you have a required minimum distribution. The deadline for that is going to be December 31st. So if you have reached the age of required minimum distributions. It is December 31st, so we're coming up on that again. And I just want to urge you, if you do have a required minimum distribution, to check in with your custodian and administrator and request those funds with plenty of time, so that the paperwork can be processed in plenty of time and you can get those funds distributed to you. And yes, the clarification was yes, it's for required minimum distributions. So if you do have a required minimum distribution, that deadline is December 31st. And so that's coming up as well. Another question that popped up, can the deferred accounts be partners with individual owners? Yes, they can. You want to make sure that you're structuring that properly. And again, the partnership is pro rata based on the amount of funds from both you and from your qualified plan. So if I have $50,000 to put into an investment and my IRA has $50,000 to put into an investment, then our share is 50-50 each, but that's based on the amount of funds we bring to the table. If my IRA is going to do 80,000 and I do 20,000, then it's 80-20 very simply, and everything from income to expenses are going to be divided along that line, and that is for the life of the investment. You can't make a change going forward once you establish that partnership. Okay, so you want to keep that in mind. Can you contribute to both a Roth IRA and a traditional? You can, but your total amount is going to be $7,000 or $8,000 if you're over the age of 50 to both of those total. So if I have a traditional IRA and I want to make some pre-tax contribution, maybe take some benefit of the deduction potentially, then I could maybe put $4,000 into my traditional IRA and then $3,000 into my Roth for my maximum combined total of $7,000. So $7,000 is the total for traditional and Roth total per person. Can education savings accounts be opened by grandparents or aunts and uncles? It can be. Reach out to me for those so I can go over sort of the details with you on that, but I appreciate that question. And you know, it's a great time to start looking at those accounts as well. Many accounts can be combined, as I mentioned, and depending on your eligibility, you can have many of these accounts. So we really kind of talked about in the questions that just popped up. So thank you for those questions. So you can have a Roth IRA, you can have a 401k, but then you can also have an HSA. As long as you're eligible, you can open ESAs for your kids. And so there's a lot going on where you can really maximize contributions to qualified plans and get that money working for you pre-tax with deductions potentially, or after tax with tax-free growth. So we're going to talk a little bit about the real estate or the different assets that we see with self-directed accounts, since we really just went over deadlines for those. And so we do see a lot of real estate-based assets. And again, you can continue to ask questions about deadlines and contribution limits if you have those, or if you have questions on different asset classes, please feel free to include those. But real estate investments, single family homes, you know, whether you're buying 123 Main Street to hold it, fix and flip it, if you're doing short-term rentals, you can also buy condos, duplexes, mobile homes, and mobile home parks. We see people invest in property through tax deeds and tax liens. We see real estate investment trusts, syndications, limited partnerships, and really the list goes on and on. But you can see how all of these different real estate assets can be held in an IRA. Remember that your investments with a self-directed IRA should be at arm's length. So you're investing, you know, not for your current benefit, but for the benefit of your retirement account in the future. So you cannot buy, you know, yourself a second home or vacation home, but investing again for investment purposes. We do see a lot of mortgages or mortgages and deeds of trusts. We see a lot of tax liens and deeds, as I mentioned, unsecured notes, debenture notes for things, you know, like bridge loans and loans to businesses. We do see options, so real estate options, a little bit different than maybe you're familiar with. I do see a lot of joint ventures, and I have seen accounts receivable. So again, this is just to give you an idea of the different investments we see at Advanta IRA, with all of these accounts having the ability to be self-directed. We also see investments into LLCs, whether that's LLCs, whether it's single member LLCs for the benefit of what we call checkbook control, and you may be familiar with that term, but having an LLC, establishing it for the purpose of the IRA as the sole member, and then going forward, using that for checkbook control, maybe some anonymity, but also LLCs in larger investment opportunities. We've seen farm animals, partnerships, movie projects, precious metals. And when we talk about precious metals with a self-directed account, we're talking more specifically about holding, the actual gold and silver bars and coins and things of that nature. And of course, you do have to use a depository, but we do have clients investing in precious metals. And of course, with the value of precious metals at the moment, you're seeing more and more of that. We see equipment leasing, things like large format printers and tractors, for example, foreign currency exchange and private stock into things like wineries, breweries, private bank stock, commodities, oil and gas. The IRS really hasn't said, here is what you can invest in. Instead, they've given us a very short list of things you can't invest in. So by providing this information to you, I'm just trying to demonstrate to you that really you can invest in what you know best. You can look for opportunities to diversify. The only things you can't invest in an IRA based on IRS rules are going to be life insurance and collectibles. And so you could see where the sky is just about the limit for making those investments. My contact information is here, and I just want to remind everybody as we close the webinar that you can download the slides. They're in the handout section of the webinar in your right-hand navigation. You can also, if you have any last-minute questions, please feel free to type them into the question box. If you have a question that you don't want to ask on the webinar, please feel free to reach out to me. I'm happy to assist you. Or if I mentioned a webinar during this presentation that you would like a copy of, I'm happy to send you the link to the recording. So again, just sending me an email, or again, you can browse our YouTube channel or our video library. A question popped up, are all contributions based on earned income? The only one that's not going to be based on earned income is the health savings account. Everything else is going to be based on earned income. And so I know a lot of times when you're an independent business owner or a sole proprietor, you might not have a lot of earned income. And so really, check in with your accountant and see if you can, if it makes sense for you to have earned income, for example, in order to maximize contributions or make a contribution. But yes, all of the retirement accounts, and then of course, with the exception of the savings account, which is a health savings account, are going to require earned income to make contributions. Does it all have to be passive income contributions? And I think what you mean is earnings. Typically, the earnings in an IRA, 401k, whatever it might be, those are typically going to be passive. There are very few exceptions to that. And if you have something like business income being returned to a retirement or qualified plan, you're going to possibly expose, well, if you have business income, you are going to expose the account to unrelated business income tax. It sounds like you might have a specific investment structure in mind, so please feel free to reach out to me if that is the case, and I'm happy to discuss it with you. But typically with qualified plans, we're seeing things like dividends, interest income, rental income, things that are going to be considered passive. If there's some reason that you have business income in there, there's unrelated business income tax, but I'm happy to answer more questions on that for you as well. I don't see any additional questions, so at this time, I want to thank everyone for attending today. Again, I'll just give you another minute. If you did not have a chance to download the handout, it is there in the right-hand navigation for you. You will receive a recording of this webinar, so it just takes about a day, usually a little sooner. You'll receive an email. If you had trouble downloading the handout, the email will provide you with my email address where you can request the handout as well. Again, thank you everyone, and I hope you'll join us again.